Hello, everyone. Welcome back to my channel. Today, I've got an exciting episode for you. And today, I'm going to talk about and dive into the latest mortgage trends, along with the real estate market and the update for where we're at right now in July. Now, the housing market has been experiencing some interesting trends, so I'm excited to dive in. Let's take a closer look on what's been happening. So today I'm going to provide an update analysis on where the real estate market and mortgage market currently is for July. We're going to discuss rates, not just the housing market nationally, but also locally here in Charlotte, different financing trends that I'm seeing. We're going to discuss the seasonality of real estate and what we typically see for the rest of the year, and also market challenges and different solutions that might help you as a buyer, whether you're a first-time home buyer or buying an investment property or maybe commercial property, things that can help you overcome these market challenges. Let's dive in. Okay, so right now in the housing market nationally, we are still seeing a reduced supply, or not quite enough homes based on what the demand and where the demand currently is. Based on Redfin's report, month or year over year, we're down about 15% on listings, which totally makes sense. I mean, if you think about it, rates have been historically low for how long? Twos and threes, even 4% looks better than 7%. So people that do not have to move are probably not going to move just due to the higher interest rates. Most of the people that are moving right now have a need to move. Not completely true, but most of the time there's a need, whether the job's transferring, they want to get their kids into a different school district, they want to move to a different community. A lot of different reasons, but there's usually a need for doing that in this type of environment. So it would make sense, it would take more to make someone want to move if they're in an extremely low rate mortgage. Now, what a lot of people don't realize is the amount of equity, especially if they bought 2, 3, 4 years ago, that they're sitting on right now, and what that would look like. So always something I suggest to keep an eye on. Be happy to help you out if you're looking for what that might look like as far as your home value. So go ahead to my bio and you can find my contact information, and feel free to reach out. But Redfin also agreed with Zillow and Black Knight in the fact that right now in this market, we have as far as the listing to sales price comparison, we're at 100%. So what does that mean? That means that the price that the home is listed at, it's selling for 100% of that value or more. That is just showing us that there's demand. There's demand out there, because if there wasn't demand, if the market was a little softer, you would see that number, 90, 95% of what the list price was. The house would sell for less, but they're not. In fact, in some situations, we're starting to see multiple offers. If it's a highly sought after property, we're seeing multiple offers, and sometimes that can be 10, 15 offers. And sometimes that can mean 2 or 3 offers. It really depends on the property and the market, but we know demand is high. Now, pending home sales is also a report that the media likes to talk about. It's showing less homes available for purchase, but it's also showing the house price index is up about 3.1%. So the home price index is not an appreciation. It's not the median home price. It's an index that they create, and it's showing a 3.1% increase on home prices. So that just, again, shows you that demand is picking up. It's not negative. Home values are not going down. If you missed the housing bubble, it didn't really happen. It was so quick, if you blinked, you probably missed it. But the home prices are going up. So all of that goes to show you and support the fact that there's still demand, and it's still a great time to buy. Home values are not going down. We've got enough demand to probably last about 3 to 5 years. So that's a little bit more about kind of where we're at nationally. We'll get to locally here in a little bit, but let's talk about where mortgage rates are at. Okay, one of the biggest questions I get asked as a loan officer is, what is the rate today? What are mortgage rates at? And so the good news I have is, over the last about week, since last Tuesday, we've actually seen the market or interest rates improve consecutive days outside of Friday, and even some yesterday. That is great news. We haven't had that many days of market improvement in probably over 3 or 4 months. So it's a great thing. Just means it's, again, a great time to buy. But the reality is the best time to buy is when you're ready. That's ultimately the truth. But we saw interest rates go up a little bit. And the reason for that is banking system and capital requirements. So a few weeks ago, there was some scares, with everything going on in the banking world. There's a lot of money withdrawn from banks. And so what happens when they do that? If you take out too much money in one bank, they have to have so much cash on their books to be able to, it's a percentage based on how much they loaned out for that day in debt. So because they did not have enough capital, they had to sell some of their assets. Well, a big portion of your 401k, a lot of bank holdings is in mortgage-backed securities. So when they started to sell those off, that caused a temporary spike in rates. Now we're seeing that come back down. We do have a Fed meeting next week, so that's big. But again, the general trend, I've talked about this a couple of times, is as inflation comes down, interest rates will come down. The only fear right now with the Feds is something called wage inflation. And wage inflation is basically where inflation is coming down, but unemployment stays low. And therefore, the fear is that people continue to spend money because nobody's unemployed, and that causes inflation to go back up again. So that is their big fear. They're talking about raising rates again next week. Their comments are very good market movers, typically when they speak, based on how they talk and what they say, what they're thinking. So that is something you want to be on the lookout, especially if you're under contract with the property. Be on the lookout for next week. It could be a big week. Now, if you're buying a home or you're refinancing, maybe for debt consolidation because you have some higher interest rate debt. I know COVID, affected everyone differently, but it did cause some clients to rack up some debt. So if you haven't looked into debt consolidation, even with the way rates are, it can still be a good option. But it's why it's so important to have a loan officer that understands the market, when to lock in your interest rate based on when your closing date is. There are so many things that are important about having someone that understands what's going on today, because it can save you hundreds, if not thousands of dollars, knowing when to do that based on your time frame and what everything looks like in your situation. So I just wanted to throw that in there. We're going to dive into the financial trends and some different things that we're seeing as far as financing on mortgages in real estate right now. So let's talk a little bit more about it. All right. So for financing trends in the real estate market right now, three of the biggest things that I'm seeing are, number one, we're still seeing a lot of temporary buy downs. And if you don't know what that is, for example, a 2-1 temporary buy down would be a 2% rate reduction for the first year, a 1% rate reduction for the second year, and in the third year, it returns to whatever the note rate may be. It's a great option for numerous reasons, but we were seeing a lot of that, especially with rates being so high. Again, it was a great option. We're still seeing that. A lot of times what clients are having to do is, if they're asking the seller to cover that, they're having to increase that price that they were going to offer by a little bit, but it's not saying it's not happening at all. The second big thing we're seeing a lot of right now is more FHA loans. And I actually did a video about FHA loans a couple of weeks ago, so make sure to check it out if you have any questions or hesitations about FHA loans. But we're seeing a lot of those because of the loan level price adjustments, or adjustments to the interest rate, that have gone on over the past few months with conventional loans. This is not tied to a specific lender. This is all lenders that do loans, conventional loans through Fannie Mae and Freddie Mac. So it affects everyone. And because of that, FHA can be a better deal. Even if you have good credit, it can still save you money in the right scenario. And the last and biggest probably thing that we're seeing right now is we're utilizing our cash offer program. So basically what that is a fully underwritten pre-approval, and Fairway will come behind you and say, hey, we think you're in such good a shape. If we miss the closing date, we'll actually buy the house cash. And what that allows our clients to be able to do is compete with cash offers in this market. As it gets more competitive, it's just going to get harder. It's going to take larger deposits. It's going to take shorter time close. It's going to take a lot of different things and creative ways to be able to be competitive and stand out as it gets more competitive. And this is just one way that we're doing it here at Fairway. Okay, so as far as the housing market here in Charlotte, North Carolina, demand is still strong here. Right now, we're seeing a lot of multiple offer situations. It depends on the price point, but if it's a sought after home, it's going to be in multiple offers. You can expect to compete, and you can definitely expect to have to move a little faster while you're shopping for homes. It's not something, unfortunately, you can think about for a couple of weeks. The home will likely sell in 3 to 5 days, again, depending on the price point and what you're looking at in the exact area, but it's probably going to go pretty quick. Right now, inventory is down 31.2% compared to last year. So demand is still there. Application volume is pretty similar to this time last year, just because interest rates were elevated at that point. So that being said, demand is still there. There's not as many homes being listed for sale. That is why we're seeing that competitive nature. And we talked about that a little bit ago. But year to date, we've seen a small increase of the median home price. It's about 0.3 or 0.3% of an increase. Now, the median home price is one thing that the media and a lot of other places like to focus on. Now, just keep in mind, it's a terrible metric to measure the strength or where a whole market is, because it's just the middle price. So if you're selling a $500,000 house, a $300,000 house, and a $200,000 house, the middle price is $300,000 because it's the one in the middle. Now, if you take one of those homes away, that middle is going to change, right? So if you're selling less, more expensive homes, and you're selling more lower priced homes, that median value is going to change. So it's not a good indicator of appreciation, which is your home's value and how that's gone up. It is not a good indicator of that, but it does show us, that right now that houses are moving, and they're moving in the right direction. Now, a big statistic that I did want to share, especially if you're thinking about moving to Charlotte, North Carolina, or the surrounding areas, is rent is up 6.1% month or year over year, and 4% month over month. That's a massive increase. We're seeing a lot of increases in rent right now. And that is also due to inflation. That's going to continue to go up. Typically, rents are not going to go down, just like property taxes. You can count on them. They don't typically go down. And if you're renting right now, just again, something to think about. If buying a home is right for you, I'd be happy to talk to you about it and walk through the steps. But more importantly, again, it just has to be the right decision for you based on where you're at and your financial goals. So that's a ballpark idea of where the Charlotte metro market is. A lot of markets are very similar, especially around the United States, but that may not be true for your market. So make sure if you're thinking about buying a home, you also have a real estate expert or real estate agent that really understands that area, the trends that they're seeing, what's going on, not just so they can help you win, but also so they can find you the right deal for you. So the next thing I wanted to talk to you about is the seasonality of the real estate market. So the real estate market typically is busiest during the summer. And why is that? It's because anybody with children wouldn't move inside of the school year unless they had to. If there's a job relocation or something like that, you have to move. But if it's not, they're typically going to move during the summer months because there's schools out of session. That being said, this year we do expect a little bit of cooling off in terms of demand, but not enough because there's so much pent up demand. It's still going to continue. We're still seeing it competitive. We're going into August. I don't expect it to cool down too quickly this year, but that's also, it's a good thing if you're selling, but it's also a good thing if you're buying. It just means if you buy a house now, in a couple of months from now, that value will likely be higher. So it's great news. It shows strength. It's not as big of a factor as we've seen in previous years, but it is something to think about. And the last thing I wanted to talk to you about are challenges that home buyers are seeing. Like we've been talking about this whole video, demand is up, competitiveness is up. It's a competitive market. So how can you stand out in a market with 5, 10, 15, 20 other offers? And the first thing is your lender matters. And I say that because a local lender with a great reputation is always going to go further than an online mortgage company, Costco's mortgage lender, a big bank. They likely have a bad reputation, but more importantly, they don't understand the market. That can cause appraisal issues. That can cause your loan to be held up and potentially miss your closing date. There are a lot of challenges, especially with a call center type mortgage process, which most of the time are going to have a little bit lower rates just because there's a lower cost. They pay their loan officers less money. They have a centralized location of a bunch of processors versus local offices with their own processors. So there's a cost to that, but it matters because getting to the closing table for a great deal than going to the closing table with the best deal, or not getting to the closing table with the best deal you can find on the market. It's not worth risking your earnest money and your due diligence if you're in North Carolina. It's not worth it because right now, one of the biggest things that we're seeing in the market to compete is also increased deposits. That means you have more money on the line, and getting to that closing table is the most important thing, making sure it's stress-free, making sure you get there on time so you don't have a chance to lose those deposits. So I mentioned the cash guarantee program. That's always something we're utilizing a lot of to be able to strengthen our clients' offers. The other things, I mentioned shorter closings. That is a great way to be competitive. We've even seen, not yet right now, but about a year and a half, 2 years ago, when the market was extremely competitive, we would see buyers offer to pay for 12 months worth of Netflix. I mean, just the silliest, crazy things. But hey, why not? It's not that much money. So a lot of different ways to get creative. That's why having a great real estate agent is extremely important. Those are some things I'd consider, along with making sure you're working with the right lender. The best team is going to go to bat for you and make sure you get the best deal in this competitive real estate landscape that we're in right now. Thank you so much for watching. That wraps up our July housing market and mortgage rate update. I hope you find it informative. I hope you found it. I got a lot of useful information and valuable information out of it. And if you like this, please make sure you go ahead and like this video, share it with your friends, and go ahead and hit that subscribe button if you haven't. We'll continue to get more updates out like that, but make sure you also check out my channel with a lot more information on real estate investing, mortgages, and anything to do with real estate. I hope you have a good one, and thank you so much for watching.